What's going on, guys? I want to show you the first 3 trades that I took this morning trading the NASDAQ futures utilizing prop firms for leverage. Again, if you guys utilize prop firms, Apex 80% off. You guys can use code DANTHONY. Also, if you're looking to join an active community where you can trade alongside myself, other traders, get access to a lot of things that are not on YouTube in terms of strategy, risk management, psychology, you guys can join Evolution Traders for 50% off. So let's get into the strategies. Let's get into the setups. Let's talk about, what exactly I'm looking for. Right now, in this current market, as we're kind of teeter-tottering at these all-time highs, we're, kind of pulling back a little bit, which is to be expected. I'm completely on scalp mode. So I'm starting off the day just looking to scrape a little piece of the pie. And I'm looking for 5 points. Now I'm trading size between 5 micros and 1 mini. If you guys are a little bit less experienced, or you have had trouble in the past going on tilt, blowing up, not being able to handle bigger losses, stick to trading 5 micros or around 5 micros. Definitely do not get into trading 1 mini contract, as it's very volatile in the morning. You can definitely get whipsawed and be down $1,000, $2,000. Hell, you can even blow your account. So always capital preservation first. Make sure you're trading size that you guys can handle. So coming into today's price action, what I'm looking at always is I want to look at what is the previous swing high from pre-market. Okay, I want to know what the previous swing high is. So that most intermediate, that most recent swing high, I want to know where it's at. Now, if I kind of zoom in a little bit, you're going to see leading into the New York Open, we had this swing high here about 30 minutes before the open. If I go back to the left of the chart, you're going to see another swing high here. So automatically what I'm telling myself is that if there's momentum off the open, can I catch a little bit of a trade? Between 23,618 into this swing high here of 23,640, there's more than, let's call it 20 points. Okay, so it's about 21.5 points. Let's just say it's 20 points. There's 20 points worth of room. Now, if I'm looking for a 50-point trade, a 40-point trade, a 100-point trade, I don't realistically think that that's enough room for you, because you're going to go from supply to supply, demand to demand, depending on if the market's breaking out long or short. But myself, I'm looking for 5 points. And if I put on 1 mini contract and I'm able to capture 5 points, that's $100. So if you're trading with a firm like Apex, they're only requiring you to log in a $50 winning day that counts towards a potential payout. So this one trade is 1 day closer to you eventually getting paid out. Now, obviously, there's some other rules that you have to follow. You have to make $2,600. The minimum amount that you'll be able to take off that $2,600 is $500. But again, you can run that at scale across multiple accounts. So if you have 5 accounts and you're taking out 500, another 500, that's $1,000, $2,000, $2,500 on just running 5 accounts at scale, making about $100 a day. Okay, so that's the beauty, that's the benefit of prop firms. So if you guys want to grow that portfolio, definitely go buy some more valuations and then try to take multiple funded accounts to pay out, okay, versus just having the one. Because again, it's going to take a lot more stress off of your shoulders, not trying to make $500 on that one account. You can make $500 across 5 accounts, only making $100 a day. So that was trade idea number 1. I call it the opening drive, looking at the previous swing high and then telling myself, where's that next measured move? I have 20 points of potential here. If I have a order or I market order into this, can I have a hard take profit that will get filled and get me out of that position at 5 points? In this particular scenario, we do break this swing high. We go from 23,618 all the way up to a price of 23,631. Okay, so more than 5 points on that initial wick. It does pull back into the 20, pulls back again about 5-10 minutes later, and then immediately runs the highs again. But by this time, I'm not too concerned about, sitting through all this drawdown to recapture here, because my mindset going in was I'm going to be right away, or I'm going to be wrong right away. Now, on a particular opening drive trade like this, okay, what's my stop loss? Well, if normally on any given day, my average winning day is between $200 and $300, or $300 and $400, I'm looking to not lose any more than my average winning day by double. So what does that exactly mean? If I look at my P&L and the way that I trade, and I tell myself, okay, when we walk away with winning days, we're finishing the day between $250 and $350. That's telling me on any worst day, I want to lose no more than $400. Now, how you lose that $400 is completely on you. If you want to risk it all on one trade, risk it all on one trade. If you just happen to lose that trade, you have to stop trading that one particular account. If you want to split that up and risk 200 and 200, or you want to split that up even further and risk 100, 100, 100, 100, you can do it however you choose. It's all going to depend on how much size you're trading and the risk you want involved per trade. For me, on a trade like this, if I'm closer to a mini contract, I'm probably going to be risking a little bit closer to $300 on this potential trade. If that trade was to lose, then the next trade that I take, I cannot trade a mini contract. I'm probably going to have to go down between 2 and 5 micros, and I'm going to have to risk no more than $100 per trade. That's how we just work that. The next trade that I took was this 20 SMA short. So we swept this overall swing high. We pulled back a little bit, very strong candle, 52 points worth of range here. We closed below the 20 SMA. So this price is sitting at 23,603. All I'm waiting for is a following candle to confirm the low. I'm jumping in, same idea. Again, depending on if the first trade was green or red is going to depend on how much size I'm going to put on the table. In this particular situation, I was already green, about $100 on this overall day. So what I'm looking to do is trade the same size and see if I can knock another one out of the park. With this being said, it goes from a price of 23,603 all the way down, wicking to 23,580. So here it's almost another 20 points. And when you're playing with a very high win rate strategy, there's only one thing you need to keep in mind. You need to manage your losses and you need to manage your wins very, very tightly. So it doesn't mean that just because you have a higher win rate strategy that you can sit there and trade a million times a day, because you will run into the losing trade, and that one losing trade could potentially wipe out 2 or 3 winning trades. So on this particular move, I'm able to make another 5 points, another $100, and now we're up about $233. I run everything on market orders, so sometimes I'm getting filled at 6 points or 4 points or 7 points. I'm just, as fast as I can click the button, as fast as I'm going to get out. Can you run an ATM strategy with a hard bracket? Absolutely. If you choose to do that, if it's easier for you. I just come from a field like in a space and in a generation where I was always taught manage your own trades. You know, you're not, if you can't manage your own trades by entering and exiting, then, you know, you really shouldn't be trading anyways. Now, again, there's a big asterisk next to that because I can't predict if there's going to be a news candle or something that happens where I'm in a trade, and if I would have had a hard stop, it would have taken me out a lot earlier and it spiked up against me and I couldn't get out in time. That's going to happen. That's always the risk. So just understand the risk, and what it really comes down to is, how do you want to trade? What makes you feel more comfortable? To me, getting in on a market, getting out on a market feels more comfortable to me. I feel like I have more control over the trade. To you, it might be, I just want to set and forget it. I want to click the button once and I either want to be stopped out or I want to take my gains. And I 100% agree with that. And I think that if that's where you're at and that's what makes you feel comfortable and that's what makes you trade more consistent, then by all means, 1,000% do that. Okay. But those are the 2 trades. And again, you know, I was able to scrape out a little bit more on that trade. It was closer to 7 points. I think it was like 6 points and 3 ticks. So a little bit more on that trade. So it kind of boosted me up over the $200 profit. And at that point in time of the day, I tell myself, you know what? I'm 2 for 2. It's very early in the market. I'm going to walk away. Now, here's what gets people is that they'll look back at the situation and they'll see, wow, if I just would have stayed in that trade, I would have made thousands of dollars. I don't look at it that way. Every day is going to present a new opportunity. I don't look at this as a missed opportunity that I missed out on making money. I look at this as I came into the day, I did my job, I traded my strategies, I made money that gets me one day closer to taking a payout, and I could care less what happened, right? Like, that's someone else's job. Let someone else go grab that cash. Like, I'll let you go grab that cash. If you want to sit around and trade all day, that's completely your prerogative. You can do whatever you want. I just believe I want to knock in enough small winning days to where I get myself to pay out, and I want to stay consistent as possible because I need this income for cash flow. I need the passive income on a month by month basis. And for me, it's not necessarily about trying to retire off of the prop firms. I trade equities, I trade options. I've got a portfolio that kind of pays some dividends on a month in and month out basis. You know, I sell some covered calls. You know, so there's a lot of different other investment type of strategies out there that you can use to kind of compound your gains depending on how much allocation you have. But with that being said, I'm not looking for $20,000 today. You know, if we can get a few of these accounts to pay out each and every single month, it's adding to the bottom line. With that being said, I hope you guys all have a fantastic day. I hope you guys all have a fantastic end of the week and a fantastic weekend. If you want to join Evolution Traders, that link is down in the description box below. And if you need those Apex accounts, you guys can use my discount code DANTHONY. You're going to save 80% right now. I'll see all of you guys on the inside.